Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Weekly Sectoral Analysis. It's 21st of October, 9:30 p.m. And last week, what has happened is there has been a trend line breakdown in the Nifty spot chart. You can see this trend line, which was holding on since very, very long, possibly almost more than 2 years. Now, this trend line has been broken. Now, what we need to understand is, apart from this trend line, there is one more thing. There is an uptrending channel over here. I'll just try to highlight this. You can see this is the first point, second point, third, and fourth. Now, constantly, if you see, there was buying emerging at the lower levels, okay? And there was some sort of selling which was emerging at the higher levels. Now, many times these channels can go on for pretty long time. In 2010, I guess there was a big channel in Nifty which went on for more than 6 months. Now, in my experience of trading in the markets, I've understood one thing, that whenever in an uptrending channel, if the Nifty spot doesn't try and test the upper particular channel line over here and tries to break the lower one, this is a very high probability that this is the weakness of the market, that it is not allowing it to test the upper channel line. This is a very bad sign in the market. Understand this thing. You may not like it, but I have to show you what is the right thing happening in the market right now, and you need to understand that. So as a trader, you need to manage risks. You need to trail your stop losses and understand that yes, there has been one trend line breakdown, but this particular channel line is still holding on. If we break below this one, 19,400, and possibly close below it, then we might come at 19,200. If we break 19,200 on closing basis, then I guess we will see a very sharp fall in the markets. Yes, we do have a little bit of support coming up over here, but we need to be up on our toes, because as I told you, that overall volatility will remain, and the reason for that is a lot of gaps are visible in this particular correction, and these gaps are acting like a resistance. Now let us have a look at Bank Nifty. Bank Nifty is currently in a downtrend in the daily time frame charts. In the weekly time frame chart, the trend is flat, and even in the weekly time frame chart, you can see that there has been a trend line breakdown. Even in the daily chart, there was a small trend line support which has been broken. Now, if we close below this support of 43,553, then the next level to be tested could be possibly 43,254 or 250. In private banking stocks, what we have seen is that there has been a continuous selling pressure because of the biggies, because of the big banks. Stocks like HDFC Bank, you can see consistent lower highs, lower lows visible over here. Even ICICI Bank is not as bad as HDFC Bank, but yes, you can see some sort of weakness which started appearing slightly over here and somewhere over here. Now, if ICICI Bank closes below this particular level, which is somewhere around 925, then we will be able to see around 908 or 910 levels in the futures. In next few days. Now, there is one stock which has been continuously showing weakness in the private banking sector, which is Kotak Bank. You can see there has been multiple tops. This is the first one. Then we have a lower high, again a lower high, and consistently making lower lows. Even over here, there was some selling pressure evident on this day, a big red candle. But then suddenly there has been possibly some positive news coming up in the Kotak Bank. So some sort of revival is visible. Now, again, we'll have to revisit on Monday and Tuesday. That is this just a one-day bounce back, or is it going to be a reversal in Kotak Bank? Only time will tell in the next few days. Okay. Now, if we have a look in the PSU banking chart, what has happened is stocks have corrected, and I've been sharing with all of you consistently through my educational videos that PSU Bank had rallied a lot. Like even in the weekly time frame charts, you can see the RSI had reached almost till level of 76, 50 or 77 levels, and it was very much possible that they should correct. But one thing which I was extremely surprised to see was the way SBI did not hold this level. This zone was a decent, not a very strong, but a decent support band for SBI, and actually it should have rallied, probably closed above this level and could have rallied higher. Now this was my view. By the way, this was my view. Need not necessary. Every time the market is going to work as per your view, and when it doesn't view, then I guess you should be humble to the market and just avoid, trying to fight with the market that why it's not happening, what I want to let it happen. So I guess we should leave aside SBI right now and now focus on Punjab National Bank. So in PNB, what we can see, it has rallied pretty nicely, and it was high time that it should retrace. Some profit booking was necessary, and which is visible over here. Now, after considerable profit booking, I guess this zone from 72.40 till 69.70 or 70 levels, this is a pretty decent support band. From this support band, if some buying is visible and if we start moving up, then if we see a shorter term breakout in the short term charts like the hourly or the 2-hourly charts, then possibly the swing traders should focus on the stock. The second stock is Bank of Baroda. Bank of Baroda is currently trading at a support, and it's looking slightly less stronger in comparison to the Punjab National Bank. Still, if it manages to give a breakout, then a decent momentum on the upside can be probable. Energy Pack. Now, Energy Pack, it has remained pretty strong, and what has happened in the last few days, it did give a pretty decent rally on the upside, the index, but on this day, there was some sort of selling pressure visible. Now, generally, if you see, most of the times so far, we have been seeing higher highs and higher lows visible in this sector. This is the first time when we can see a lower high. If this is broken, if this low is broken, then possibly we are starting a new downtrend. And if the price comes and settles over here, then we are possibly into a consolidation zone. Now, the king of the energy pack is obviously one stock, and that is Reliance. Now, Reliance is, trading at a very important juncture right now, that it has been able to close below a trend line, but this entire zone, I should say, this entire zone, just let me mark for you, this entire zone is a very, very strong resistance, right from 2300 to 2223. This entire zone, you can see the way prices have reacted over here. So this entire zone is a very strong support for Reliance. How Reliance is going to act over here, it's very difficult to say. Only time will tell. But if Energy Pack wants to stay on the higher levels, if it doesn't want to start a new downtrend, then Reliance will have to do something and it will have to start bouncing back. Metal Pack. Now, metals, I guess in this particular rally, managed to give a decent rally on the upside. It came down, consolidated too much. Any sort of consolidation which is way more than normalcy, then something is wrong, or maybe the momentum is less or something is less. But overall, I can say that Metal Pack is looking very, very lackluster. In fact, on this day, prices did close below the support band, but still the next day it manages to close above the support band and try to show us that it was a false breakdown and possibly prices could rally higher. But again, after a small spurt on the upside, again prices are coming down. So I guess I should say that there is no momentum visible in the Metal Pack, and there is a decent possibility that if the Metal Pack closes below 6586 or 6580 levels, then we can see some weakness coming up in the Metal Pack. Auto Pack is looking pretty strong in comparison to other sectors. You can see prices are trading pretty nicely on the upside. One stock which I can see has not been able to rally off lately is Ashok Leyland. It started the rally pretty late, and from this price juncture of 168, it managed to bounce back. But the selling which was visible on Friday was across the board, and when generally selling is across the board, it's very easy to, just fall with the market. So as of now, I do not have any view, but if we see a breakout above 185, 186 levels, then I think the traders should possibly watch this stock once again. Finance pack. Finance pack, it seems that it is more or less consolidating. It's sideways. Nothing attractive in weekly time frame charts, pretty lackluster. Even in the daily time frame charts, you can see this is a support band. We have lower high over here, and we have the same amount of levels which is visible in the bottom. So basically what I can see is more or less there is some sort of supply coming up on the upside at these juncture and demand coming up at this juncture. As of now, it seems a pretty long consolidation. It will only be a matter of time if it manages to break above this particular band with a decent candle, then some upside momentum will be visible, but it's not going to be very, very easy because many stocks which are in the finance pack are also in the bank Nifty also. So you need to be a little bit careful before you take any trades. But still in the finance pack, there are two stocks which continue to surprise me. One is Bajaj Finance. Currently, Bajaj Finance is in a strong uptrend. It has retraced and swing traders can have a look at it. The second one is Bajaj Finserv. Now, Bajaj Finserv is even more stronger than Bajaj Finance. Yes, this inverted hammer, big red candle is not looking good, I can understand. But if we manage to close above this, then this uptrend which has started will continue to remain on the upside. Consumption pack. Consumption pack, I guess we need to be little bit more careful in our approach because recently there has been a higher high in the weekly time frame charts and a lower high in the RSI. So yes, this is a sign of waning momentum. So if you're holding any stock in the consumption pack, be slightly careful. I'm not saying that this is the top or something, but yes, you need to be a little bit wary and trail your stop losses. If your stop losses get hit, kindly exit the stocks and get out. Simple as that. FMCG. FMCG, well, it tried very hard in the last week, last to last week, tried to, go higher, tried to support the market, but, it's result season, and in result season, at times, stocks just go up and down and a lot of volatility is visible. So looking at the charts, it's one more time, going back into the zone, into the consolidation zone. And mainly thanks to ITC, which brought the markets down, especially on Friday. You can see this is the border which I had drawn and I had shared in my Twitter handle also, that we need to close above this particular rectangle, and we need to close above 462, 465, 466. These are resistance levels, especially from this rectangle band. And you can see exactly over here we have an inverted hammer and the prices have gone down. If we close below this, yes, we'll be able to see some sort of weakness. And if above 463, 465, then some momentum on the upside. Infra pack, I guess once again we can see that the momentum is waning. We have a higher high in price, lower high in RSI. And as a trader, I would be a little bit cautious. I'll be trailing my stop losses. If I get stopped out, I just get out of these stocks. But one thing I can say that before the markets came down on Friday, the cement stocks were looking very, very strong. Even right now, I can say JK Cement is one stock. There are few other stocks also which are looking very, very attractive in the cement pack. But the strongest as of now is cement pack. So if there is any revival in the markets, if you see the entire theme in the cement sector rallying on the upside, then JK Cement is one stock probably which you should surely have a look at. IT pack. IT pack, we need to understand that these stocks generally have a very weird way to reacting to results, even if the results are very good or even if they are very bad. They generally, IT stocks, they react very, very strangely. And what has actually happened is the rally from 26,200 to 33,000 in IT stocks is too much. Like if you just have a look in TCS, TCS is a stock which has, rallied till 3,000 to 3,600. It's almost a rally actually of 20%. Yes, it was like up, down, up, down. Yes, swing traders have made money, but it was not a very smooth sailing rally for positional traders. I can completely understand. But this is what it is, that it means that we have rallied a lot and some sort of consolidation possibly is clearly visible in these stocks. You just have a look at Wipro, the way it came down. You just have a look at Tech Mahindra, the way it came down recently. So I guess some sort of consolidation might continue in the IT pack stocks for next few days. Pharma pack, I continue to maintain my stance that it is rallied too much. It needs to correct. Some sort of correction, some sort of consolidation is important. It's very, very rigid right now. I guess the moment it closes below 14,855 or maybe a percent below this with big red candle, then we'll be able to see lower levels visible, which will be actually good for the sector, because any rally which happens in any of the sectors, any of the stocks, if it is one way on the upside, it's very difficult to actually manage and stay at higher. Needs to correct, consolidate, and then again start rallying once again. That's the basic structure of the market. PSE sector. PSE sector, again, the PSE sector is trading near the 261.80% extension at a very stiff resistance. I would not be interested to possibly buy these stocks at these levels. Would be waiting patiently, very, very patiently. These stocks correct by a considerable level and they are available at a cheaper prices, and the entire structure of the charts are looking good for swing trades, then possibly I would be interested. But as of now, I'll be waiting patiently. On the other hand, if you're holding positional trades in these stocks, then yes, you can continue to hold them with your trailing stop losses. If the stop loss gets it and if you are exiting, that's altogether a different scenario. Realty pack has been maintaining its strength even in times when markets were not doing good, especially this rally was looking pretty lucrative. The way it went up was looking, very, very strong. And as of now also, if it manages to come down possibly, and the stocks in the realty pack, if they are available at cheaper prices, and if the overall structure of the market is pretty good for long side trades, sorry, then I would be surely interested in these stocks. Mid caps, again, I'll continue to maintain my stance. Yes, the trend is surely on the upside in the weekly time frame chart. The trend in the daily time frame chart is flat, but it's high time they should correct, they should consolidate. Some profit booking should also be visible. Then once again, it will be more attractive for the traders on the long side. All right. So just to understand the entire structure of the market, once again, volatility will remain. Overall, things are not looking very, very easy. Overall, rally which occurred in the market in Nifty from this level in March of 16,872 till these levels, especially this rally, was a time where, money was made much easily. And obviously, trading is not easy, but this was relatively easy, I should say. Over here, there will be some sort of choppiness, some sort of consolidation. Even if we do not close below this, say suppose if we manage to stay within this range, still then I would say that the volatility factor will remain. Be careful in whatever trades you initiate. And if you do not understand that the market is volatile, if you're not able to find a lot of trades, it's completely fine. Like if you have made a lot of money in this particular rally, even if you save a lot of money by trading less, it's fine. Even if you see little bit of drawdown in this sort of choppiness, but if you have made very big money over here, that is also fine. So do not be extremely harsh on yourself. Understand the entire market, what's happening, and trade accordingly. Trade wisely. Take care, guys.